$3.47. That's all Jake has left. It's the 28th of the month, after working 40 hours a week, all year long. This is Jake. Jake works 40 hours a week. Jake tries to save. Jake is careful, or at least he thinks he is. And yet, Jake always seems to end up at the end of the month with basically nothing. Meanwhile, Jake's bank just announced record profits. Again, $28 billion in net income in 1 year. Jake didn't get a thank you card. Today, we're going to follow Jake through the banking system and show you exactly how his money became their profit. This is the class they never taught Jake, or you, in school. And by the end of this video, I'm going to show you the one thing banks do not want you to know, the thing that can literally flip the game in your favor. But first, you need to understand the rules, because you can't win a game when you don't know how it's played. And before we can understand how Jake lost his money, we need to understand what his money actually is. When Jake deposits his paycheck, he figures the bank takes it, locks it up somewhere safe, and gives it back whenever he needs it. That's not what happens. The bank takes Jake's $2,400 and lends it out. To Jake's neighbor buying a car, to a couple taking out a mortgage, to a startup borrowing for payroll. Jake's money is gone, working for the bank, before Jake even gets home. What Jake has isn't money. It's a promise, a number, on a screen. And if everyone showed up tomorrow to claim their money at once, the bank would collapse within hours. The whole system runs on trust, and most people never questioning it. But what you've just learned isn't even the shocking part, because the real bombshell is coming next, and it completely changes the way you think money works. Jake needs a car. He asks the bank for a $20,000 loan. Here's what most people think happens. The bank goes into its reserves, finds $20,000, and hands it to Jake. Here's what actually happens. The banker types a number into a computer. That's it. The $20,000 didn't exist before that keystroke. It does now. The bank didn't need to have it. It created it. This is called money creation. It's the foundation of the fractional reserve banking system. Banks keep only a small slice of deposits as reserves, maybe 10%. The rest, they lend out, and that money gets deposited again, and lent out again. A single $1,000 deposit can multiply into $10,000 in loans across the system. The Bank of England published a paper confirming this in 2014. This isn't a conspiracy theory. It's official policy. Banks don't lend money they have. They create money when they lend it. Jake is still processing this. Give him a second. And that's nothing compared to what's coming next. Because what happens to Jake next is enough to make anyone angry. Jake got his car. He's thrilled. He'll pay $415 a month for 5 years. Total repaid, $24,900. The bank created $20,000 from nothing. And Jake will hand back $24,900 in real, earned money. Not a bad trade for the bank.